Good afternoon, everybody. Thanks for joining the Franchise Empire weekly newsletter. My name is Mark Magerman. I'm one of the brokers of our wonderful Franchise Empire company. Our trusty founder and leader, Tark Johnson, who usually joins me on these calls, could not make it today. So I'm ably assisted by our superstar, Rahman, who's going to be not showing his wonderful face on the screen, but he'll be in the background kind of helping me guide through our presentation for you today. So as you know, each week we kind of in 5 minutes or less, Rahman, if you could show the agenda on the screen, that would be awesome. This week we will cover in 5 minutes or less, as we always do, a really exciting resale opportunity with $1 million in existing sales. We'll, as we always look at some large, very popular franchise brands, we're going to dive into the IHOP, International House of Pancakes brand, chat about that for a little while. Again, as we always talk about tremendous case studies of our wonderful candidates who come through Franchise Empire and end up as very satisfied franchise owners, we'll talk about Michael and Joann Fenner, their story and their wonderful example of stick-to-itiveness. We'll also kind of just touch base on some of Tarek's podcasts, and this one will be on the number one mistake franchisees make and how much money UPS stores actually make in 2025. We'll get to that near the end. As always, here's a quick disclaimer that we need to show up on the screen for you folks. And also, if you're live and you are interested or have a question or a comment, please use your texting or use your note-taking or whatever it's going to be to send us a message so we can answer it. Otherwise, we will just get started. So without further ado, we will be looking at another resale today. So our featured resale today, and again, resales, each week we are updated with all of our wonderful franchisor partners. So if you're interested in looking at what we may have available in our resale portfolio, please log on to www.franchiseempire.com/resales, and that will register you to get into our program and get you started on that path. So again, these resales that we share with you are very confidential, so we only give you the information that the brand has shared. In this case, the brand and the location are maintaining confidentiality, which I guess I understand from the perspective of people listening. You're not really sure what to do with that. But again, if you go to the website, franchiseempire.com/resales, and mention that you were interested in learning about the brand we're discussing today, we're happy to get that information out to you. So this brand, if you guys are regular listeners to our podcast, you know we love home services, and many of our candidates ultimately become home service franchisees. This is in the home service business. The asking price is $415,000, which is a very attractive resale price because it's not that much more than what a new territory may go for in the area. And they are claiming their 2024 gross sales of $1.04 million. And again, these are non-verified numbers, and these are just the numbers as presented to us by the brand. So obviously, any opportunity to go into this brand, this resale more deeply will require, obviously, the due diligence on the part of the candidate looking into that. So what do we jump to when we see a brand like this? Actually, Rahman, if you could just scroll back up to where the numbers were, that would be fantastic. So a couple of top lines. Obviously, home service businesses. When we hear home services, we jump right away to needs versus want. Very recession-resistant businesses, things people have to fix in their homes versus something that they may want, like a brand new car or something like that may not be recession-resistant. So we got a recession-resistant business, gross sales of $1.04 million, and an asking price of $415,000. So what conclusions do we make on something like that? Well, again, if you've been listening to our conversations each week, you know that the asking price of a resale business is usually multiples of what the seller's saying that their discretionary earnings are. So if the asking price is $415,000 and they're trying to get, say, 3 or 4 times the EBITDA number, that would tell you that the profit number in this business might be somewhere around $100,000, seller discretionary in earnings. Again, obviously, you need to validate it, but a very affordable resale business. This has got systems in place, people in place. It's part of an established brand with proven systems and a long track record of success. You can keep scrolling, Rahman. Thanks. And it's a really great growth opportunity for a hands-on operator and experienced leader. So let's just pause on that for one quick second. So chances are that the seller is hands-on in his business and is not passive. That's my guess. It may not be the case, but I think anybody who'd be interested in purchasing this resale, if you have a history of buying businesses and this isn't your first one, then you might be able to take some of that acumen and add this to your portfolio. If you've never bought a resale business, whether a franchise or not, this is one where you would really want to be focusing on buying this business, but also operating it on your own as the owner operator. So you could learn the business, learn the staffing, learn the needs of the business. And then ultimately your goal would be to bring in another operator. So you could kind of segue out into more of a CEO type role, which would be the goal of many franchise owners who do these resales. So again, home services, definitely a team in place, definitely some margin to sink your teeth into, and a wonderful opportunity for somebody to take that and grow with it if they've got a track record or are not afraid to get in there and roll up their sleeves. And again, we have a list of over 100 resales at any given point in time with a variety of our brands. And again, if you pay attention to us, you know that we have a very strict procedures in adding brands to our portfolio. We are only going to introduce our candidates to brands that we have this track record with. So if you take those brands, there's over hundreds of resales every week with various brands spanning all different parts of the country, even into North America, even into northern North America or Canada. So please register, and that will get you access to our team and the opportunities that are there for you. So if I don't see any other questions, again, we can move on, Rahman, if you don't mind. So as you know, each week we also love to share success stories. Being in this business, I could say that there's probably nothing more gratifying for us in the business that we're in when you meet a candidate and you help guide them through the processes, and it results in them signing a franchise agreement and springboarding into life as entrepreneurs and really kind of achieving a lot of the goals and objectives they set for themselves. It's really very gratifying what we do. And this case was no different. Michael and Joann Fenner, I know these folks, these were candidates that I got to work with. Michael and Joann live in the South Carolina area, kind of on the border of South Carolina and Georgia. They came to us with a clear goal in mind. They wanted to find a business for Joann to run full time, with Michael supporting the growth behind the scenes while he continues in his full-time role. But he also was cognizant of the fact that he wanted to segue out of his corporate world, but they were really very smart about it. And it's one of the advantages we find when we get candidates that are husband and wife teams or partner teams, because you can afford the luxury of keeping one income while the other person focuses on the business. So in this case, that's what they were trying to do. Michael had spent 16 years working in avionics. He's a tremendously bright guy, a lot smarter than me, that's for sure. And both he and Joann were ready to build something on their own. They explored several service-based franchises, but weren't really set on any one specific industry. So we looked at a bunch. So they connected with me and our team, and we walked them through a series of questions and exercises that we like to put our candidates through. And together with my assistants, but mostly them, they narrowed in on a few high potential opportunities, and it quickly became clear that senior care was really where Joann seemed to shine. if I could say this, I'm sure she'd be okay with me saying it, but she's very shy. She would always actually just have Michael on the screen initially, and she wouldn't even show her face. So she's very painfully shy. But once she found this category with this niche, her personality came out. She was bubbly, very excited, very enthusiastic. So we introduced them to our friends over at Home Watch Caregivers, which is a brand that's owned by Neighborly, which we don't need to get too into it, but we have very good relationships with these folks, and they just bonded really well. The franchise development folks and Michael and Joann, they hit it off well. It was clear right from the start that that this was going to be a really good fit for them, offering strong systems, long-term growth, and the chance to make a real impact in their community. And once they were introduced to this brand, they said to me, Mark, we don't really want to talk to anybody else. We're really going to focus our sights on Home Watch. So they ultimately purchased 2 territories, interestingly enough, one in South Carolina and one over the border in Georgia that was highly recommended by the brand. And now they're officially on their way to building their legacy. They can grow together. And last conversation I had with both of them, they had already signed their first lease. And Michael, the bold guy that he is, was saying, hey, Mark, once we get this up and running, can you and I talk about maybe adding another franchise to our portfolio? Which, of course, I would say, absolutely, we can do that. So congratulations, Michael and Joann. It's the beginning of something really big, and we couldn't be more proud of you guys. And we're here to help you, even if you have any questions once you get up and running. So again, very, very nice people and very rewarding for the folks here at Franchise Empire who are able to help these guys with their dream. So congrats to you folks. You can keep going, Rahman. Thanks. So as you know, we dive into franchises of the week every week, ones that you definitely have heard of and maybe want learn a little bit more about. In this case, everybody has heard of IHOP, known as the International House of Pancakes. So let's dive into this brand a little bit, please. In 1958, brothers Al and Jerry Lapin, along with their investors, Al and Trudy Kalis, opened a small breakfast restaurant in Toluca Lake, California, called the International House of Pancakes. By 1960, the concept began franchising, making the start of what would become one of America's most recognizable family dining brands. In 1973, IHOP introduced its famous acronym, simplifying its name while expanding its reach. That means going from International House of Pancakes to IHOP, obviously. Through the 1980s, the company restructured around a bold mission to evolve from a breakfast-only spot into a 3-meal-a-day family restaurant. That strategy obviously worked. They became the go-to neighborhood diner for pancakes in the morning, burgers at lunch, and comfort food at night. So fast forward to 2018, when IHOP pulled up one of the most talked about marketing stunts in fast casual history by temporarily rebranding as IHOB or IHOB, the International House of Burgers. The move went viral overnight and successfully drew attention to its growing lunch and dinner offerings. Not sure if any of you remember that, but it was actually a really very bold strategy that most people didn't think was going to work, but it was very cool that they did that. So now the brand is part of what they call a company called Dine Brands Global, the same parent company that owns Applebee's, among others. They've expanded more to more than 1,800 restaurants across 17 countries, serve about 700 million pancakes every year, all through independently owned and operated franchise locations. So let's dive into what it takes to own an IHOP on your own, if that ever became something that you're interested in. Okay, from a numbers standpoint, the initial investment is between $639 and $2.8 million. And again, if you pay attention and you've been on these calls with us each week, these are the types of businesses that people don't get in to open one. This is usually a multi-play business opportunity, multiple units to be bought or sold. And in many cases, buying out resales would be conducive if you wanted to buy more than one. You could honestly operate one, but again, most of the people who are investing in these type of businesses are buying multiple units. The franchise fee is $20,000, which is very low. Royalty fee is 4.5% of gross sales. on top of a national advertising fee of 3.5%, which really makes it an 8% cost to the franchise owners. But when you think about it for a minute, you can't watch major sporting events or major television events without seeing IHOP being advertised. They spend their money really smartly. And as a franchise owner, your 3.5% allows them to keep those strong marketing and advertising brands going. Looking for candidates with a net worth of at least $1.5 million, which you can understand because of the cost to get involved, with minimum liquid assets, $500,000 or more. Again, if you pay attention to these calls, you know I was a multi-unit franchise owner as well. We ultimately, my partner and I, ultimately went out and got a couple smaller partners, smaller investor partners, so we could make sure we had the liquid capital that we need. So usually these businesses tend to have partnerships unless you have just tremendous earnings and wealth attached to your name. Who are they looking for? Who's IHOP want to see become franchise owners? They're looking for experienced operators, business leader or multi-unit restaurant operator with strong management and operational experience. It's not for the experienced business owner to get involved with a brand as complex as food. They're looking for a brand builder, so someone who understands the value of accessible pricing, family dining, and community engagement. Somebody obviously growth-minded, capable of developing multiple restaurants within a defined territory, but also not only developing them, but managing them. They don't manage themselves. And that's where the experience that the operator would have would come in really handy. Somebody that's a strategic leader, skilled in real estate selection. I'll tell you what, we weren't, but we made sure we hired somebody that was. So real estate selection is really critical. Team development, marketing, and customer experience, all very important traits to have for the owner. And a community seeker, values being a visible local presence and fostering family-oriented environments. So if this strikes you as a nice example of who you are and you've got the financial means to afford looking into this type of IHOP concept and you've always wanted to own a restaurant, well, here you go. Let's scroll down and look at a little bit of the financial data. As you know, we don't want to spend too much time on it. This is all part of the item 19 in the FDD. They're available to all interested franchise candidates if you get that far. But I'll just take a couple of numbers out of here. This is obviously the FDD that would have just come out early in 2025. So it's a reflection on sales through the 2024 calendar year. A couple things of interest here. If you notice, the amount of restaurants that were reporting went down, which when you get the brand of this many restaurants, closures are not that abnormal. And sometimes you close a couple to help the other stores around them do better because it's maybe a little bit oversaturated. I don't know the specific reason, but that's not abnormal. And if you look at the annual average gross sales, again, I'm focusing on the top line here, the freestanding line. I mean, there are some inline ones and end cap ones, obviously, but the sales were relatively the same, $2,085,000 in 23 and $2,072,000 in 24, so relatively flat. Number and percentage of units that exceeded the average gross sales, you can see that, again, relatively flat, maybe a little better 2023 than 2024. Median sales roughly flat. You can see the highs and you can see the lows. So again, it's my quick snapshot on this is it doesn't appear that the chain as a whole is growing, but it also shows that it's maintaining really high sales of $2 million. So again, I don't really think IHOP's going anywhere too soon. I think it's a valid brand. And if you had any other questions and you wanted to ask them here, please do. If not, and if you want to see if there's any territory availability maybe in your area, www.franchiseempire.com/check territory is where you would find that information. Again, a couple highlight benefits to the franchise owner for International House of Pancakes. It's an established global brand with over 65 years of trust, brand equity, and cultural recognition, backed by Dine Brands Global. Their marketing strategy over the years has now evolved where they're a 3-menu revenue model. strong breakfast dominance with growing lunch and dinner segments supported by national marketing. Again, many places that focus just on breakfast, just do breakfast and lunch. So by adding that third revenue stream, it's really an advantage for them. Comprehensive franchise support. They provide training, site selection guidance, design assistance, ongoing operations consulting, multiple format options, freestanding, inline, and end caps. Obviously, if you're going to build a freestanding, the investment might be a little bit higher than if it was an inline or end cap in a strip mall. But definitely options, and they range from 1,000 to 4,500 square feet. And again, a proven multi-unit growth model, preferred partnerships for operators who can develop multiple locations. So not an owner-operator model, not a one-off type model. So that's a little bit about IHOP. So if you had any questions or comments or wanted to learn more about it, hit the link below, franchisempire.com/check territory is where we can help you find that information. Okay, Rahman, you can keep going. Thanks. And last but not least, as we kind of wrap up these calls, again, it's going to be a little quicker today because I don't have Tarek in here going back and forth with me on it. So we're just getting right to the point. Probably a lot of you will probably be glad that this will be a shorter meeting. But you know that Tarek does his Zero to Profitable Franchising podcast on a regular basis with really exciting guests. And the one that's attached here, please feel free to look at it if you haven't already. It's the #1 mistakes that franchisees make. And again, to get, can you put that back on the screen, Rahman, please? I just want to read that out loud again, if you don't mind. So if you want to subscribe to the Franchise Empire Show YouTube channel for our latest podcast episodes, you can go to www.youtube.com/channel. You can see it right there. And that's how you can register to be part of these Zero to Profitable Franchise podcasts. He does them weekly. He has different guests, different franchisees and franchisors. Very, very knowledgeable. I try to listen to them myself. The one that we're talking about here, if you can mind, you can keep scrolling, Rahman, please. The #1 mistake franchisees make. Thinking about buying a franchise before you write the check or jump on a call, there's one question that could make or break your success. Can you actually follow a system? In this episode, Tarek breaks down why some candidates get rejected, how franchisors quietly test you before awarding a territory, and the #1 trait that separates the top performing franchisees from everybody else. So if you think it's just plug and play, you'll find by listening into Tarek's video here that it is definitely not that. So again, you can either watch on YouTube or wherever else you listen to your podcast platforms. He also has a episode this week. We want to talk about a UPS store, which we've actually done in the past. Is a UPS store actually worth the investment? In this video, Tarek walks you through the costs, the fees, average sales data, pretty much all the things that we just looked at when we were talking about IHOP. Again, you could get that on YouTube. You could register with us here at Franchise Empire. Any way you want to get your podcast. But these are really very helpful sessions for those thinking about franchising, not sure where to start. We find that so many of our candidates appreciate the information and the education that we're providing, all free of charge, by the way, really helping them with their journey. So that's kind of a wrap for this week's newsletter. Please feel free to reply with questions or feedback. We're really grateful you guys take time, whether it's live today or you listen to it at your convenience. I apologize for Tarek not being in attendance. He'll be back next week. We'll be back with another episode. And as always, thanks very much for your time. And we hope we get the chance to talk to you real soon. Enjoy your day. Thanks. Bye-bye.